Traders, welcome back to another episode of this week's trading series. Yesterday I dropped a video about how to trade double bottoms and double tops, and if you haven't watched that video, I really suggest you watch that video. I released it yesterday. I'm gonna leave a link down below this video here. Now the reason I start here is because I took that double bottom setup, and as you can see, we are smiling our way to the bank. We were shy of taking profits here, and the market started rolling back down. I was so tempted to close, but as soon as it started pushing up, I moved my stop loss to around this level here. Now I recently moved my stop loss just below this candle here because it's pretty late at night, or should I say it's in the morning. Actually, it's a Thursday today, the 15th of February, 37 minutes past 1 in the morning, and I'm back with another banger. Now I was tempted to close this trade here, but you know, we're trading the Tokyo session, we might hit those take profits here, but you know, I'm just going to keep trading my stop very close. But that's not the purpose of this video today. I've been getting very friendly questions about forex trading, like what is a pip, how do forex traders make money. So I thought today I might just summarize to you, not to answer what is a pip. Of course you can just Google those things on Google, guys, or just watch a random YouTube video. But what I want to talk to you guys here is how the market moves, because all these strategies that I keep sharing with you guys are based on how the market moves, and that is pure market structure. So let's talk about this. How do you really make money in forex trading? Well, you can only make money by buying or selling the market. That's the only way you can make money. Either you are buying or you are selling the market. Now, how do you know when to buy or when to sell? It's the real question. And I have some beautiful drawings here. If you like these drawings here, smash the like button. But the market can only move in 3 directions. Either it's pushing to the upside, or it's pushing to the downside, or it's just simply consolidating. Well, it's just 2 directions, to be honest with you, because this is just consolidation. This is where the market is not doing anything, it's just bouncing up and down, up and down, up and down, up and down, and stuff like that. Now, how do you make money if the market is pushing to the upside? Well, if the market is going to push to the upside, how we know that a market is pushing to the upside is if it pushes, retest a bit, not break the previous low, and then push again and close above the previous highs. Once we close above the previous highs, then we know that we are pushing to the upside. All we're waiting for now is a retest so we can take it back to the upside again, so we can repeat this behavior again. So all we're waiting for is this moment here, so we can buy the market and wait for it to push to the upside, break the previous highs, and then we're going to anticipate it to do the same thing, come back to retest, then we're going to buy it here back to the upside. That's how we can make money in an uptrend, in a market that is pushing to the upside. If we're going to buy the market in an uptrend, this is the best possible way to make money. These are the areas that give us our best possible chance to win a trade. Now that's on a buy. On a sell is just a complete opposite. If the market is going to push to the downside, we're going to push, exhaust a bit. We might even make it around this level here. As long as we don't break the previous highs, then we are still pushing to the downside. But what's going to validate that we are still pushing to the downside is if the market comes back to push to the downside and break and close below the previous low. Once we close below this low, we know now that, okay, so we're in a downtrend, we're looking to sell the market. The only thing we're waiting for now is this retest. Then we can sell the market here and benefit to this move to the downside, in hopes that the market is going to repeat the same process. If we come into the market and we find it's already around this level here, let's say maybe it's already broken this level here, there's no need to rush. We just need to wait patiently for the next phase, which is an exhaustion, so we can take our sells here, anticipating this move back to the downside. That's how we can make money in a market that is pushing to the downside. We are anticipating these moves here, these lower highs. Every time the market pushes to the downside and break the previous low, we wait patiently for it to come back and retest, then we can take our sells here to benefit to this move to the downside. Now Another way in which the market moves is in a consolidation. This means the market is not breaking the previous highs or the previous lows, but it's just stuck in consolidation. It's just bouncing in between two zones, up and down, up and down, up and down, up and down. Now, there's three ways we can trade this. Either, if we can see that the market has bounced, let's say the market has been coming from the downside, right? Market has been coming to the downside. We've been trending nicely, making higher highs, higher lows, higher highs, higher lows, higher highs, right? And now all of a sudden we can't make our higher high here. We come back to make the same high as the previous high, right? And then the market pushes to the downside. It doesn't close or break below the previous low, but it just stay within this range. Now we know that, okay, the market is in consolidation. Once we get our two taps, now we know that the market is in a consolidation because it can't break to the upside and it can't break to the downside. So now, how can we take this? How can we trade this? Well, either we are buying the market. Let me move this candle here actually, because this is when we're supposed to buy, right? Don't mind my drawings, guys. But once we see that the market can't break to the upside, not to the downside, the next time the market comes back to the downside, we can buy the market, anticipating it to move to the upside. Once it gets to the previous range here, once it gets to the previous highs here, knowing that the market is failing to break to the upside, we can then sell the market again to benefit from this move here. Once it gets to the downside, we can do the same, buying the market, anticipating a push to the upside. Sell the market, anticipating a push to the downside. Buy the market, anticipating a push to the upside. And what? Sell the market, anticipating a push to the downside until this behavior changes. Now, that's just one way to trade the consolidation. Another way to trade the consolidation, let's say the market had rejected this level here and then push to the downside and break this level here. Once it breaks this level here, then we can go ahead, execute the trade, because we can see that this level hasn't been broken to for a very long time. So once the market breaks that, then it's sure gonna rally to the downside. So we can take that stop loss above structure, anticipating whatever structures we're gonna get here, looking at the candlesticks like these candlesticks here. I've already made a video on how to trade candlesticks, or just explaining candlesticks as a whole, and I'm also gonna leave it under this video here. But we can also take a breakout of this consolidation here. I don't really like this style here, because more often than not you find a situation where the market is broken to the downside just to trigger us and then push back inside and then continue the consolidation phase. So I don't really like taking breakouts. The only breakout I take is a break and retest, which is this one here. So once I've noticed that the market has been stuck in consolidation for too long, after that break, whether it's the upside or to the downside, and then wait patiently. What am I waiting for? I'm waiting for the market to come back and retest, like I always do when I'm buying the market here. Every time the market pushes to the upside, I patiently wait for a retest, and then I can take a buy back to the upside. So it's the same thing here. Market was stuck in consolidation, then it finally broke to the upside. I patiently wait for it to come back and retest, then I can take this trade back to the upside. That's my favorite approach to trade the consolidation phase. This and this here, where I'm buying the lows and selling the highs, buying lows, selling highs, buying lows, selling highs. If that changes, if the market breaks to the upside, then I don't rush into a trade. I'm not going to start executing a buy around this candle here. I'm going to wait for it to push, wait for an exhaustion, and then I'm going to take the market back to the upside. I'm not sure if this makes sense, traders, but this is as simple as it gets. This is as simple as it gets. This is pure market structure. In an uptrend, we wait for the market to break the previous highs and come back to retest, and then we can take our buys. In a downtrend, we wait for the market to break the previous low, come back to retest, and then we can execute a sell back to the downside. And in a consolidation, either we're buying from the buying the bottoms and selling the tops in a consolidation. If the market breaks the consolidation, we patiently wait for the market to come back and retest, then we can take this trade back to the upside. Now, if you're still a little bit confused here, don't worry, traders. We're gonna take this to the charts, because I took trades today based on these concepts here. So take a mental note of these drawings here, and then we're going to take this thing to the charts, right? Let's go to the DXY. I did take a trade today on the DXY. Did I? Yes, I took a sell today on the DXY, and I want you guys to tell me which phase of the market was this. Let me just remove that. I want you guys to tell me which phase of the market was this one when I took this trade here. So this is where I executed the trade back to the downside. Was it an uptrend? Was it a downtrend? Or was it a break of the consolidation? If you said the break of the consolidation, then you are correct, because the market was coming from the downside pushing to the upside, and then all of a sudden we couldn't make higher highs anymore. The market was just stuck in this consolidation, bouncing up and down, up and down, up and down, and then finally boom to the downside. Now if you still remember, once the market breaks to the downside, I patiently wait for the retest, then I can take this thing back to the downside. And that's what happened today here. If you can, let's just zoom in and just digest that. That's exactly what happened, guys. The market was stuck in consolidation. We waited, patiently waited for a break and a retest, and then took the market back to the downside. So that was the consolidation phase. Did we take any on the Euro USD? Euro USD, we took a buy. Well, this is the same here. This was the consolidation phase as well. As you can see, the market was coming from the upside, pushing to the downside, and then it was stuck in this consolidation here, not breaking to the upside or to the downside, just bouncing up and down, and then finally boom, we broke to the upside. Patiently wait for a retest, then I take the market back to the upside. This is the consolidation phase that we were just talking about here. Let's just move on to another example. Maybe we can find okay, this was a double bottom. This is where we started actually. Did we hit our take profit? Not yet, man. This thing is still stalling, but I like the previous candle there, so we are still pushing to the upside, and for that reason I'm gonna move my stop loss just below this wick here, so that if this thing decides to come back and kick me out, then at least I've got all this profit here. But that's not the point of the video. Let's move on to the New Zealand dollar USD and see if we can find any setup here. Okay, so this is an uptrend, right? Oh, I was not supposed to tell you that, but I mean, I'm sure you guys are smart. You can see an uptrend, right? We just spoken about an uptrend right now, but this is what was happening in this market here. The market was coming from the downside, pushing to the upside. Then we got an exhaustion, and then we pushed again, got an exhaustion. And what do you think I'm going to do? I'm going to buy the market, because I know that for every push we anticipate an exhaustion, and after an exhaustion we need to push to the upside. Now granted, we did sit on this trade for quite some time here. I really didn't expect it to give me that, man. This was such an emotional draining trade, but as you can see, we finally hit our take profit. I always target a 1 to 2. I like my 1 to 2, guys. They just give me the best possible edge in the market. But this is an example on an uptrend. We don't have a downtrend here today. We didn't take any sales. It's only on the DXY, and that was just the break and retest. But I'm pretty sure you guys can see where I'm going with this. This was just a quick short tutorial on answering how do you make money as a trader, and you can only make money through buying or selling. The most important thing that we need to understand is when to buy and when to sell. And if we go back to our drawings here, where are our drawings? Is it GBP USD? Yeah, I think it's GBP USD. Where's our drawings, man? There we go. If we go back to our drawings here, we can see that the only place where we can buy the market is if once we've validated that it's in an uptrend. And how do we validate that a market is in an uptrend? We can't validate with this push, right? Because this is just one push. So we push, we exhaust. The second push is very, very important, because the second push must break the previous highs so that we can understand that indeed we are in an uptrend. So we got the second push, broke the previous highs, and now we're waiting for that retest. This is where we buy the market. And in a downtrend, we can't really tell if the market is pushing to the downside with just this one push here. After this push, we need an exhaustion, and then a push again to violate and close below the previous low. Once we close below the previous low, we know now that okay, so it is confirmed that we're in a downtrend. All we're waiting for now is a retest, then we can execute the market, back to the downside. I put this in the wrong place actually, but anyway, you understand what I mean, right? So after the break, we wait for a retest, and then we can sell the market back to the downside. This is the only way we can make money in a downtrend market. Well, not the only way, but this is the most logical way. I'm sure we can all agree that selling here gives us a better chance of winning the trade other than selling here when it breaks out here, because if we sell at this breakout here, look at how small our risk management is going to be. But if we wait for this retest and sell it here, let me just illustrate that. If we sell it here, then we can see that stop loss is going to go above structure, and then we can have a much bigger room to collect profits. Whereas if we sell here at this break here, look at where our stop loss is supposed to be. The risk management is just off, to be honest with you. So this is the only place where we can sell the market, or the only logical place, or my favorite place. Let me just say that this is my favorite spot to sell the market. Every time it comes back to retest, this is when I sell. And of course, in a consolidation, sometimes I sell and buy in between ranges depending on how big the range is, because sometimes you find that the range is this big, right? Let's just cancel these two because I want to show you something here. Sometimes you find that the range is this big, right? So in a range this big, of course I can buy the lows and sell the highs, and buy the lows and sell the highs, because there's much space for me to take profits and set my targets nicely. Okay, I'm not gonna do everything there, but you understand where I'm going and where I'm coming from, right? So I can sell the market here, and I can target my 1 to 2, and I don't target all the way here because nobody knows what the market is going to do. Yeah, we theoretical wise, I'm not even sure if that's a word, but in theory we know that if it bounces from the downside, if it bounces from the upside, then it's coming back here, but we're not sure. That's why I always take my 1 to 2, so that even if there's not enough momentum in the market, even if the market can push to the downside, right, and then not make it all the way here, then I know that I'm safe in that trade there. I've already taken profit. But yeah, this is just what I wanted to show you guys with my beautiful examples here. And have we taken profit yet, man? Okay, it's actually the GU. Let me see. Not yet. Man, I thought we were gonna see that take profit live. But I hope this was very helpful to you guys. I mean, if I don't have much energy, please forgive me, guys. It is almost 2 a.m. in the morning, and I just couldn't sleep, so I thought, you know what, let me just drop this valuable content for you guys. So just let me know what you think about this trading approach in the comments down below, because some people use indicators, some people use order blocks, some people are trying to trade with the banks. There's just a lot going on in the forex industry, but if you keep it simple, I'm sure you can start making some money. Actually, my time is up, as you can see there. We're almost done. We left with like 18 seconds, right? So in that 14 seconds left now, make sure you smash the like button and subscribe to the channel, and I'll be back with another banger.